Forex is a tough profession, arguably one of the hardest in the world. You need to face constant volatility, uncertainty, and more than a few moments of disappointment. Trading Forex isn't just about reading charts or predicting trends. It's a journey that requires patience, discipline, and the ability to master yourself. To achieve sustainable success, you need to be equipped with many qualities that most people might not even realize. Below are the 7 critical secrets I've learned from my own experience, the valuable lessons I've learned while trading, and the conversations I've had with other traders. This video will highlight the common mistakes that all of us can fall into. I hope these secrets will help you find your path and achieve positive results on your Forex trading journey. If you find this content useful, please like, share, subscribe to the channel, and share these messages with other traders so we can all learn and grow together. 1. Accept risk and avoid the desire to win every trade. This is the hardest thing to accept for traders with a big ego. In the Forex market, you cannot always be right. I understand the feeling of winning a trade, thinking you've found the key to success, and then pouring all your passion into the subsequent trades. But the truth is, this market is unpredictable, and a win rate of around 60% is enough to generate profits, provided you manage risks strictly. The big issue that many traders face is not being able to accept failure. We need to understand that losses are a part of the game. We can't win every trade. Don't pressure yourself to always be right, as that will only cause stress, exhaustion, and loss of direction. Treat every losing trade as a brick that helps build the sturdy wall of experience. Every failure is a valuable lesson that helps refine your strategy and improve your emotional control. When we learn to accept losses and focus on the bigger picture and long-term strategy, we find stability in our trading journey. 2. Simplify your trading strategy. I've seen many traders make the mistake of trying to use too many indicators and complex tools. This not only makes the analysis process overwhelming, but also leads to stress and loss of control. I've fallen into this trap myself, thinking that more indicators would help. I remember those early days of stepping into Forex back in 2017, while still a student. I had dreams of getting rich and making big money from just a few trades. Back then, I thought the secret to success was knowing how to use as many indicators as possible. The more, the better, and the more complex, the better. So I signed up for course after course, trying to learn how to use all kinds of indicators from moving average. But what was the result? Sitting in front of the computer screen for hours, staring at endless zigzagging lines on the chart, the more I looked, the more confused I got. I put all my trust in indicators, hoping they could predict price movements, but ended up with disappointing losses. To be honest, I felt discouraged when I realized that despite understanding so many indicators, I still couldn't control the market. Later on, I realized something very simple. All technical indicators derive from the price data itself. They merely reflect what the price has done. And obviously, there's no guarantee that they will accurately predict the future. Sometimes what we need to do is simply return to the basics like Japanese candlestick charts and price action. Imagine standing before a vast field. If you look at everything simply, you will easily find a path. But if you keep adding complicating elements, you will lose the overall view, not even knowing where to go. Trading is similar sometimes. Simplicity is the key that helps us maintain clarity and make the right decisions. 3. Patience and avoiding addiction to trading in Forex. One of the common mistakes I often see in traders, especially those just starting, is the feeling that they need to trade constantly. You might see many potential opportunities, but in reality, not every moment is a safe, clear opportunity to enter the market. Successful traders know how to wait. They know when to enter and when to do nothing. Sometimes doing nothing is the best strategy. It helps us maintain patience and avoid wrong decisions driven by emotions. Remember, the market doesn't always offer opportunities for you. Patience is also a skill that not everyone can cultivate. Patience not only helps you control your emotions but also allows you to spend more time with your family. I understand that for many people, family time is precious but often overlooked because of the focus on trading. Remember, success is not about trading every day, but about managing your time well and achieving balance between work and personal life. When you take a step back to enjoy moments with your loved ones, you not only improve the quality of your life, but also gain more calm and focus for better opportunities in the market. Sometimes stepping away from the market and spending time with those close to you is the key to becoming a successful and happier trader. 4. Control emotions and maintain discipline. Emotions are the greatest enemy of traders. You may have felt panicked after a losing streak or overconfident after a big win. These emotions can easily make us lose control and fail to stick to our trading discipline. I've experienced these emotions and understand how strongly they impact our trading results. It is important to keep a stable mindset and avoid letting emotions dictate decisions. Successful traders are those who maintain discipline, not letting emotions such as regret, arrogance, or fear affect their subsequent decisions. Treat each trade as part of an overall strategy rather than an independent event. Discipline is the most important factor for every trader, not the trading strategy itself. Even with a good strategy, without discipline, you can still lose. When I first started with Forex, I spent time trading on a demo account, then a cent account, and finally larger accounts. Back then, I was just a fresh graduate hoping to earn an income from the market. Practicing with small accounts helped me build discipline without having to bear much financial pressure. I've provided a link to open a demo account below the video description, where you can open an account and start learning to trade. Remember, discipline is the key to success in Forex. Practice well, starting from small steps, because sweat in training, less loss in battle. Don't worry about tomorrow, the day after, or next week. This market will be here for hundreds of years to come, so there's no need to rush. Be patient and focus on honing your discipline. If you've joined any broker, check if they offer a demo or cent account. If so, start trading on those accounts to help develop your discipline. Discipline will take you much further on your journey to becoming a successful trader. 5. Don't take losses personally. Many traders, after a losing trade, feel the pain and start to think they did something wrong. But the truth is, losses are an inevitable part of trading. Don't torture yourself over losing trades. Don't think you're incompetent just because a trade didn't succeed. Instead, learn to accept it and move forward. Remember, the market has no emotions. It doesn't care about you, your effort, or your struggles. The market doesn't hold grudges or favor anyone. Your job is not to take revenge on the market, as that is a mistake. I have a friend who used to want to get revenge on the market, but the more angry he became, the more losses he incurred, eventually leading to debt. Instead of thinking about revenge, see each loss as a chance to learn and practice discipline. Each loss is an opportunity to review your trades, draw lessons and improve. Remember, the market will always be there, and you can come back with a better, calmer, and more clear-headed approach. The urge to avenge the market after a loss will only lead to poorly thought out, emotional decisions that result in even greater losses. Remember, the key is to maintain a calm mindset and not let emotions take over. Losing doesn't mean you've failed, it's simply a part of this game. Rather than rushing to regain what you've lost, stop, learn from the failure, and continue with patience and discipline. I have this mindset. Every time I lose, it's an opportunity for me to learn discipline, a chance to review my trades, find weaknesses, and improve. Losses aren't the enemy, they're the teacher that teaches us how to be stronger and more resilient. The Forex market will be here for the long haul. You don't need to rush. Focus on becoming a better version of yourself every day, and the results will come. Long-term success comes from being level-headed, self-controlled, and having the ability to see the bigger picture. 6. Build a plan and stick to it religiously. I cannot emphasize enough the importance of creating a clear trading plan and sticking to it. Don't let the small fluctuations in the market cause you to waver and abandon your plan. I've seen many people fail simply because they lack the patience to wait for good signals. A trading plan is like a roadmap. It helps us know when to enter trades and when to stay on the sidelines. Sticking to this plan helps us avoid mistakes and maintain stability and control throughout the trading process. Remember, a good plan isn't just about numbers or entry points, it's also a commitment to oneself. It requires discipline and patience to stay steady, regardless of temporary market fluctuations. For many traders, ignoring the plan and acting based on emotions often leads to disastrous outcomes. When you have a clear trading plan, treat it like a promise to yourself. No matter how the market fluctuates, stay true to that commitment, because consistency is the key to long-term success. 7. Take a break after big wins. After big wins, the best thing you can do for yourself is rest. Taking a break is not only a reward for your hard work, but also a way to keep your psychology stable when you return to trading. I usually spend time recharging myself to avoid the overconfidence that can lead to reckless, high-risk decisions. When you rest, you have the chance to reflect on your trading process, learn from what went right and wrong, and prepare better for future challenges. Every time you win big, do you remember your losses? Do you remember the moment of closing a losing trade? If you remember those, hold on to your profits tightly with each big win. Don't let victories make you lose your caution. Taking breaks helps you maintain clarity and avoid letting winning trades make you forget the lessons from past losses. True success comes from knowing how to maintain balance and not letting the emotions of winning disrupt that balance. For me, trading isn't my main job. It's a small part of my life, but it helps me significantly increase my income. My main work is in business. However, thanks to trading not taking up too much of my time, I can continue pursuing my passion, spend time with my family, maintain my main work, and still profit from the market. I know many of you listening to this podcast may have experienced loss, disappointment, and self-doubt, but don't worry too much. Everyone makes mistakes, and what matters is what we learn from those mistakes. Learn to accept failure, simplify strategies, maintain discipline, and always seek balance in your life. I hope today's sharing will help you have a fresh perspective on Forex trading, and perhaps it can change how you approach the market, thereby achieving more sustainable success. Thank you all for listening, and I look forward to seeing you in the next podcast episodes.